Good afternoon, y'all. Welcome. It is the Tuesday edition, August 12th, 2025 of Trading Trends. New all-time highs in the market. We got up to basically a 643 close here in SPY today. The rally was led by the small caps, though. That catch-up trade has absolutely taken off. Already looking at the next one here. We talked about that a little bit today in the chart report. If you joined us on X, today Russell up 3% was the small caps. Transportation stocks absolutely ripped. We'll take a look at a few airlines today as the single stock edition. Another just a programming note, I will be out for till I should return next Wednesday. So I'll still give my usual forecast. And today, like I said, we'll cover single stock edition. So let's get into it. Like I said, I will return next Wednesday, I believe it's the 20th. All right, so let's shift the dial. See this airplane here. Transportation really did lead the way. We'll take a look also at some ADRs. SE out of Asia, Delta Airlines, and then ONON Holdings ripped higher. These guys were up some, in many cases, double-digit percent, while Cardinal Health, ouch, SE, that is a typo. We'll get to that correction. Apologies for that. And SAP suffered drops. New all-time high for the S&P, Ethereum, NASDAQ, Japan, semiconductors, communication, tech, and the mega cap 50. It's not supposed to be SE. That is supposed to read CE. So I will correct it in the doc when I upload it. So first off, before we get into those, let's get into the dashboard panel. It was a lot of things happening. I'm also looking at a ticker I've never seen before, actually. It was on that list right there. Actually hit a new all-time high today, and I may have seen the stock before, but it really hadn't been on my radar, and now I think it is. We'll see if it's actionable. But first off, before we get to the intraday tape and the index, like I said, S&P up 1, Meta up 3, a big communications day, second best sector today after communication. I'm sorry, communication is the best sector today, tech second, although they're basically very close together, obviously. AMD adding 1.5%. We talked about the big soar in small caps of 3%. Palantir adding 2 to call it $187. Apple up 1. That stock's looking good now. That is a buy. If you're waiting and pausing, we're not featuring Apple today, but that one has caught up now. And if you're not as squeamish, you can get in. That will be a catch-up trade. Everyone and your mother owns it, so it'll get allocation. I kept on saying it today on the chart report. Every squirrel is going to get a nut in this market. I think it's the market right now. Again, it reminds me of a roulette wheel where everything will get allocation. So Apple, no different. I'm really looking at the next one. I think it's going to be a laggard like biotech, but Apple's already caught up. That's probably got room to go. It's still down 8% on the year. Other movers, Microsoft adding 1%. That thing's up to 529. Google, a nice day, although not up as Meta. I'm up nearly as much as Meta, up 1%. Bonds continue to look like trash, lost 0.5%. Everything in the market basically looks good except bonds, United Healthcare, and Salesforce. Again, United Health, wow. So a dead cat can bounce. It was added to 3.5%. Perhaps it has bottomed. Maybe not. Okay, so really fast in the intraday action. Yeah, the CPI came out before the open, of course, and really after we decided we wanted to go higher, it was pretty much from 10 a.m. They shot it from 637, and no looking back. The new floor was 639, and we were overbought on an RSI basis from 11 a.m. onward. Typically, imagine a super long line at lunch is my nice analogy for that. As the line gets longer and longer, there's a line of bidders for your bagels, egg salad, sandwiches, whatever, what have you. And this continued all the way up until 3:30 today. The buyers were upset that the bell rang. They said, "No, I want some more." This probably goes into tomorrow. Would not want to stand in the way of this trend. Folks that say, the market's too expensive at 640, you said that at 540, and so on and so forth. This thing's going higher, probably to like 695 in my estimates by New Year's Eve. So overbought to end the day. Below average volume today, not atypical for a summer Tuesday, but it was a CPI, not massive reaction. Also, I wanted to say we do have a kind of a gross bearish divergence here. We have a new all-time high, and we touched outside the Bollinger Band, and yet I'm only up to 66 on the RSI. Don't love to see that. Means, very few handful are powering this move. Stuff like the mega caps, where you see XLC and XLK being the top two sectors today, up more than 1.5% apiece. Lets me think that we can fall quickly to 631. That being said, that's 11 points or about 2%. We have it to give. It's pretty much house money. But that is a divergence right here. Stochastic momentum still curling upwards. But that's glaring to me. I wouldn't be shocked. Other than that, like I said, we had a bullish accumulation date start for this on August 7th, I see here, ending on or around the 22nd, so the end of next week, with a target of right around, I had said 645. I was giving it to get to the end of next week, and today I told you we touched 643, essentially 642.85. So still see it continuing onward, maybe some zigging and zagging, but still the target is 645. It's getting very close. With the exuberance and animal spirits of the market, maybe it punches to 650 or something crazy like that. But again, this is glaring to me. I still do think we revisit 631. It's not crazy at all to see a big red day potentially in the future, but absolutely stupendous chart. Let's get into some stocks. So I won't be back for a week. Some ziggings and zagging. And like I said, I do think by the end of next week on the 22nd, we are dancing with 645 on Spizzle. But don't be surprised, like I said, from some downside, we visit first down to 631 and some volatility. I say that as VXX continues to hit new 52-week lows. By the way, a predecessor, we said this, Q's, new all-time high Friday, new all-time high Monday. And then I said it's a matter of time before SPY does it. SPY does it today. And also another signal for you was VXX, new 52-week lows on Friday and Monday, because some folks will say, oh, they're just the NASDAQ, and I was just going higher. The VIX was giving you pricing that those puts were being priced less and less. People were getting more familiar with bidding up this environment, and that's reflective in a rising RSI and the other technicals. Let us get to some stocks that really moved. It's interesting. Some of the stocks today, I know S&P all-time highs, but we're not talking about, Meta and stuff like that. They didn't register multiple standard deviation moves. There are some that did. There are actually a handful of ADR, so let's take a look at them. I only give the stuff that moved love. So this is interesting. SE is an entertainment company, an $85 billion one, pretty massive out of Asia, hence the ADR, Southeast Asia, I believe. Up 19%. I'm assuming this was this was an earnings reaction. I'm looking at the chart, the biggest candle in about a year. Still not overbought here. 66, the exact same reading for the S&P, although you get some vol expansion outside Bollinger Band close, which it has not done since July 18th. I think this one, again, this is a 1 year chart here. I think this has a bullish 2 weeks, and this gets to, but here's the problem. My fully valuation is about 170. So I think it did just about everything in 1 day. This thing, again, was trading 145 a day ago. So I liked it a lot better then. So still bullishness over the next 2 weeks, but it did a lot in 1 day. So pretty much a quick one analysis on SE. Let's see if others are different. But that's a huge, huge 19% day. Let's get to the next one. Airlines, that Delta, a lot of them registered multiple standard deviations, similar charts instances. I didn't want to feature every single one, but almost all of them were green. This is Delta, a very, a good looking chart. There are worse ones out there. This, again, very similar to the last chart. I think it has a bullish another week and a half or so, kind of, with the market, but my target for this is right around 59. So again, it did a lot today. It took a lot of work. This thing was at $51, was Delta a week ago, with a slightly rising 200 moving average, really flatlined at 54.85, and now it reverses it finally. I think it hangs up there. I think it gets as high as, like I said, maybe 59, and then it comes down potentially just underneath. Maybe potentially still a little bit of frustration with Delta here. It's tussling with its 200 moving average. I think it will be fine in the end, but at 54.86, I think will still be a level to be contended with in the next 3 weeks or so with Delta. But a very nice day for the entire transportation space. The best subsector performance today. Next thing that they bid up was ONON on holding. This is also an ADR. So giving some loves to these guys that moved quite a bit today. This is how big are these guys? $15 billion, an up 9% move, textiles, clothing, and such, tennis wear. This looks like it's got more to go. I don't love the chart overall. These guys peaked back in January at $64. 200 days flatlined at 52, and a big move here. I like the rejection off of 45 and a nice pop up there. And obviously trying to be magnetized to at least 52. It's interesting. It got to 54 today, essentially, and then they still close at 49, but still a massive day, up 9%. I see bulls. This is interesting. In a weak name where every squirrel gets a nut, this could be a trade. Tactically, I don't love it long-term or anything. There's better names than this. Again, lower highs, too. I like the recovery, and potentially it's finally based here. And I want to give names like this some love, but I also don't love that this has not held above a 50 RSI since June 12th. That lets me know when the going gets tough, folks easily exit this line. So you probably need to see another day or two. You probably want to see it hold 50 to $51, see it close there a couple days, and then I do think it's probably headed to 55, and then you see if the juice is worth the squeeze in this one. But this could be, the day 3 of a nice recovery here of $45 to 49. I'm not shocked if this actually does get to 55 in the next 2 weeks. That's 5 points of upside right there if you're looking for, international textile play. Like I said, every squirrel gets a nut in this market right now. There's allocation to be given almost everywhere. Losers today. Healthcare continues to look really, really bad. Some areas absolutely exit. Cardinal Health, I don't want to say horrendous, but today down 7%. They hammered down this thing. They did have earnings today. I think this is 2 weeks lower for these guys. But again, pretty much it did everything in one day. I do like the bounce it had off the lows here down to 138. They sold it. And then the bounce up to 146. They got very close to 200 day. And they said no. This also similar to the last name. This has not had above 50 RSI trading, but for a shorter amount of time since July 10th, the week of its highs. I think it's got a rough 2 weeks with a floor of about, I think it lives at about 150. So, some zigs and some zags. It probably gets back a couple of bucks to where my cursor is here and more like that, down for 146, 150, and things like that. But this thing has really been doing, I don't want to say the march of death because it's off of highs, but this thing has been doing a step lower since July 10th, and today, woof. But still a nice rise in 200 moving average, a chart really not one close under the 200 moving average. So a nice looking chart. This healthcare overhang is absolutely terrible. This is a $40 billion company. They do have $220 billion in revenue, though. So, a fundamental balance sheet sucker right here. Yield 1.3, not amazing, but good flows in this. Probably just slower growth. But this looks like it does want to get to 155 longer term, I would say, in early September. So a frustrating one for that. Cardinal Health down 7% today, got hammered. Another name that got hammered, Celanese. We looked at this name, I think maybe last month, from weak performers. This is a chemical company. It's a $5 billion name on $10 billion revenue. So a bit of a trap there. Very close to 52-week lows. Today they hammered it down 13%. They had earnings last night. These lows were back in April at $36. Interestingly enough, they sold down to 37 today, and then they ended up closing it at 41. Today a lot of air got sucked out of this one. I do think these guys, believe it or not, have a bullish 2 weeks. I think this has already begun over here, and I kind of like the bounce off of the floor. It is oversold, so no one's going to absolutely rush into this. I understand, but I think over 2 to 3 weeks, it's going to be treacherous, but I do think this probably does try to get to $50 over 2 to 3 weeks, and that's as good as it gets, and then it continues to go lower. This is the inverse of the Cardinal Health, how it had not one close below 200-day moving average. This has not had one close above its 200-day moving average. This is a last fall story when it was $140. So this name continues to suffer, and I don't see that reversing. Nothing new over there. Ironically enough, last thing on this, it has had more than the other two names above 50 RSI trading, ironically. So some big rallies in this from 56 to 62, and then it starts to give way again. See bullishness, like I said, for the next 2 weeks for this name to about 51. So that's 10 points from here. That could be a big move, but it's going to frustrate you. Next. And then another ADR, big ADR movements today. SAP, a huge name we're familiar with out of Europe, down 4%. I don't think this is earnings. I'm not seeing earnings on my board here. I think they were just, for whatever reason, exiting European software. A massive company, $335 billion. I think they have a bullet. Look at that chart. Very few instances below 200-day moving average. They peaked July 10th at 313, and it actually touched their 200-day moving average today, 273, and essentially closed at it down 4%. What time is it now for SAP? And also, just take a look here. It's essentially range bound from going back to the stock has largely not done a ton since December, where it was at 245, and then it peaked in July at 310, and then now it's at 200-day moving average. So lately hasn't been doing a ton. You're seeing a little bit of weaker momentum here, but I still think it has a bullish like I said, with the market sharing its beta through the end of next week, I still think this wants to tussle and get to at least 290, if not 300, where it was on the 7th. I think this has a nice week or so ahead. I think it's the 290, so that's 14 points right there, or reversal of today. I think this has 4% of upside. So there's some trades out there in different areas. Okay, those were the losers. Top 3 gainers of the past 5 days. I want to keep this, somewhat diversified and not get the same exact names. This was interesting. These are the top 3 performing stocks of the past 5 days. Typically, the parameters, again, for you folk, what I look for is at least 5 million average daily volume in shares and at least $20 stock price and 1 year of trading volume. Okay, so Astera Labs was one. I'll be very honest with you. I have not seen before, at least not really taking a close look at. So let me take with y'all a close fundamental look at. Semiconductor name, they're $30 billion. I have heard of this name. Apologies. I have heard. These guys look good. So this is more of a long shot. These guys do 600 million in revenue, so not massive, but the market cap is. They do semiconductor-based connectivity solutions for cloud and AI infrastructure. And they peaked today at $192. The 200-day is at 95, so always love that when it's up 2x above a 200-day moving average. Nothing like trees don't grow to the sky there. But again, up 7%. These guys had earnings last week, I'm showing. I wouldn't chase it right here, but obviously the chart looks stupendous. I can't say anything bad about here. Some ugly moments, surprisingly, back in March. They did sell down all the way to $60 again, and then it went lower in April to 49. And my God, now it's 3+ bagger from there. I don't love this is really, really, really ascended after this. After this earnings breakout above 140, this is ripped absolutely straight through. I don't want to chase it here. Momentum can take it higher with SPY printing all-time highs and Q, doing pretty much the same. But over the next 2 weeks, I see this one more so probably getting closer to, 142, to be very honest with you. So I don't want to chase it. I probably see it filling its earnings gap. Sounds crazy to say, but that's what I see. You also get a nice bullish confirmation, so I'll teeter-totter on that and saying that this really is. Folks, look at the candle. Folks have chased this. They were upset that the bell rang. So you know what? This probably does go higher short term, but I will still say in about 2-3 weeks, your opportunity will be about that 145 level, and you should hop in. This is a nice AI play in the semiconductor space. Next, by the way, the number for that, in the past 5 days, ALAB, 41%, or an average of 8% a day. Today, up 7%. So today, just an average day in the week of ALAB if you're a shareholder. Congratulations. Not really sure if there's options on that. I think probably there are. It's a multi-billion-dollar company. Don't know how liquid they are. Next, Celsius Holdings, if you remember this, new 52-week high on Celsius. These are the drinks, right? Beverages, yes. Again, you're getting different trades here. We're giving you ADRs. We're giving you semiconductors. We're giving you textiles, whatever. This is a $14 billion, beverage company. The energy, they're all North America, Asia Pacific, etc. And more importantly, they hit 52-week highs today. The stock did go as high as nearly 56, and then they closed a little bit lower to close up 1.3. They've had a massive week, up 27% off of earnings, or average of 5% a week. Now it's finally slowing down. 75 RSI. I think it has a bullish, week and a half to go, but my full valuation right here is honestly $53 to $54. So I don't want to chase it up here. I don't think people wanted to either when it got to that 55.87 print, and it went a little bit lower, but absolutely nice. And a nice base in here. You're seeing this in a lot of formation, a lot of stocks, this step lower through, February, March, April, and then you're seeing this rounded base, and that's where it really, really, really should get your attention. When all this area was happening here and you're getting earnings confirmation, they didn't really super overreact, and it was up, what it did, for example, in that earnings, up 4%. And then really, this breakout in Celsius should have really been the trade here at 40 back in June. There's multiple reasons to buy this chart. It's looking really good here. Right now, fully targeted. I would not chase it here. The next correction probably takes you to 48, and it's a higher vol mover, and that'll probably likely be your invitation to do it maybe in September. And that was up 27% in the past 5 days. And the next one, Applovin, up 23% or nearly 5% over the past 5 days today, up just 0.25%. Again, that has been an earnings reaction. It has not stopped really since they've announced back here. That day was up 3%, and it's been continuing overbought, still up 74 RSI. This, I think, has run its course. Again, these candles are getting smaller and smaller. That's a perfect definition in technical analysis. Look at this huge candle. It was up 12% on the 7th after earnings, rather. I misspoke earlier, up 12%, my God. And then up 4%, up 2, up a quarter today, and the candles get smaller and smaller. I think over the next 2 weeks, I do think this has a date with about 400. It sounds crazy. Maybe that's super low. It probably doesn't catch up that low. Probably closer to 430, but I wouldn't be absolutely shocked if it does visit 400. Sounds crazy. I think this RSI and the overbought will carry it through. The momentum is also starting to go lower. Just wouldn't shock me if this thing goes down to 425, and that is a reduction of $40 or nearly 10%. Again, it's up 27% in the past, or 23% in the past 5 days. And again, this peaked back in February at 525. All right. Top 3 losers of the past 5 days. They don't all go to the sky. And we were on Spaces today on the chart report. I was looking at some charts. It's crazy how much wealth and has been transferred within the stock. CRM 52-week low and looks awful. Trade Desk we're looking at right now, very close to a 52-week low and looks awful. There's many companies. It's all like the old tech. What's it called? Also looks terrible. Adobe. There's many huge firms that we know from 2000s that are having a reckoning. And CRM is down massively because they could lose most of their company to AI, just being done for pennies on the dollar, and the enterprise license level. So Trade Desk is a media company, media tech company, $26 billion, although they used to be worth a lot more. They're having a relative strength breakdown. These guys have been really big sufferers of earnings reports lately. Things do not look good for the company. Back in February, a 33% downward reaction that sent it to being oversold down to the depths to its 52-week lows for 2 months. It went down for essentially 2 months. Unbelievable. One day you're trading at 122, and then finally they say, you know what, $44, enough bleeding. Let's put the tourniquet in. And then it rises, and just the day of earnings, what happens? Almost poetic. It gets to the 200-day moving average on August 7th, and they say, no, this name is absolute garbage, and they tanked it down 39%. Was Trade Desk. And that's why we're talking about it, down 39% over the past 5 days. The candles are getting smaller here. You had massive volume, over 100 million shares, the most in the entire year for the company. Now what? This will probably take time to stabilize. The 52-week low is back here on April 7th with the SPY 52-week low at 43 even. Mamma mia. It probably bases, I don't know, it could go to $50. Something like that. It is oversold as well with 24 RSI, and it has been for 4 days. So no one's really, bidding, running this up immediately. But I do think if you're super patient, probably closer to a month, this could get to $70, which is a big move. That's $20 to the upside. But I'd be careful. There's a reckoning of tech. But like I said, I'm a firm believer that every squirrel gets a nut, even some of the dumb ones that maybe didn't adapt or die. And I think that is true of squirrels, probably the ones that get run over, I guess. But I think this has another pop in it. Dead cat bounce to get maybe near, say, 10% from its fall on 200-day moving average, which would get you that move to, a $70. And that's what I'm thinking. But it's going to frustrate you. There's better trades than this, and there's better trade desks. See what I did there? Than this. Trade desk down 39% over the past 5 days, or almost 8% a day, although it vomited all in one day. Next, thank you. Next, I'm guessing this is an earnings reaction. Crocs, yes, they hammer this thing down 29%. I will be honest, I did just get a pair of Allbirds. I'm wearing my Crocs a little bit less. Crocs, although I was loyal, sometimes I just forget they're on and they're easy. Say what you will. I'm not a fashionista. Whatever. Up 4%. I'm sorry, not up 4%. $4 billion market cap on $4 billion revenue. These guys used to be worth a lot more. This used to be like almost a meme stock back in the fall. This was $150. Now you see it coming off the 52-week lows. Earnings was ugly, like I said. Now what? Probably similar to what I said on the last one on the trade desk. This will probably frustrate you over the next 2 to 3 weeks. You may get rewarded, and I just wouldn't be shocked if this has at least a gas to get to at least $87. Wouldn't shock me. And that's 10 points from here. So if you're looking for some, again, we're giving you kind of allocation in all kinds of sectors here, all kinds of areas of the market internationally and at home. So I think you do have a move to 87. Actually, wouldn't even. That's as far as we'll go for now. This one has had more flirtation with the 200-day moving average since their earnings in May. Obviously, not a great looking chart, but I do believe in convergence of moving average way up high at 80, and then the rejection off of that 74. But we'll see. It's still early. Like I said, it's probably going to take time. So I'm bouncing around that 75 handle mark, and I do think in around 2 weeks, I don't think it's crazy to see this thing at 87. All right, and the last one will feature the Crocs. Yeah, down 24%, or an average of 5% nearly for the last 5 days. Today, trying to reverse that trend, up 1.75%. And the last one will feature on the day on the loser of the week is Upstart. I remember this name. Upstart, this company, it's a tech company. They peaked back in February at $96. A nice rising 200-day moving average, although they've been in purgatory from March 10th until June 20th. This thing was in the penalty box, just really choppy trading, although it absolutely resolved higher. And now this is having one of the worst stock markets in the one of the worst weeks in the stock market. They are a consumer finance, cloud-based AI lending platform. It's a $6 billion company off about $1 billion revenue. They got something there. They reported earnings last week, and they've continued to bleed. The reaction was ugly. It was down 19% the day after earnings. Again, like I said, these guys peaked in Feb at 96. And nice little bounce today off the 200-day moving average. The 200-day is at 61.55. It got very close to that and then closed, essentially flat on the day. Similar to what I said for Crocs and Trade Desk, probably higher in the next 2 weeks. This one, to me, probably heads to not only do I think the 200-day moving average holds at 61.55, I believe this one heads to probably around $69. So that's about 6 points or 10% upside. It's had a nasty week, down 4.5% a day. Today flat. It might take a little bit longer. Not super oversold, so a little bit more strength than the other guys. Again, you can see that on the chart as well. So I do think it will resolve constructively. It'll probably base this week, like I said. I like your risk, though, if you get in around 62. I do think that's heading to about 69. There's a lot of ways 62, 69 September call spread pops out in my head like Motel 6 lights style. Okay, well, my favorite part. So the top 3 trades of the past 5 days, they're not all just long SPY into the highs. It's actually long ALAB, 41% in your pocket. Short Trade Desk, the second best trade in the stock market, from the parameters I laid out, is short Trade Desk, down 39% if you anticipated that crap out after earnings. And then third best trade was long Celsius of 27%. Those are the best. It doesn't have to be chain link this and Farcoin that. All right. And lastly, my favorite part, because the stocks is absolutely, they is cracked out. Top 3 trades of the past 52 weeks. These guys, I want to keep it diversified, but I couldn't. These guys are all from the same store, and they're up hundreds and hundreds of percent. And we've recommended each one on this show. I'm proud to say that. So when they set up, too, number 1 top stock of the past 52 weeks from the real stocks. I'm talking ones that are at least $20 and at least have 5 million shares and have at least been trading for a year. Your number 1 dog is OKLO. These guys, what else can you say? They have, what's the market cap now on this? $10.5 billion. We put out, last time I'll say it, July 2nd, we said buy this at close. Where was it? July 2nd, $51 with a 72 target. Okay? And we had that for about 2 weeks out. And you see what happened. It went to 70, and then 6 days ago, it went to $85. And again, today up 9%, a rip-roaring day. This thing's up 1,007% over the past 52 weeks. Nice and, I don't want to say nice and steady, but you can see the beautiful chart, rising 200-day moving average. Looks absolutely great. You get some corrections that dig into the prior highs. That's what I expect, much further on. I still see a little bit of the gas coming off just in the next week and a half or so. All that being said, if you can get an entry on this thing around $72, $73, I think is still a great level to get into OKLO, because the target for me is about $88, and we're at 78 today. So not only is the best stock, again, this is like your Steph Curry, like, and he's crushing it right now today, no injury, no nothing. OKLO, your year over year, this is the best performing stock since August 12th of 2024, and hit a high this last week. So this isn't flavor of the week or anything like that. This thing's hitting right now. And also you can see in the chart, this thing's been above 48 RSI, curve fitting, whatever, but you can see the strength is what I'm trying to say. Above 48 RSI trading since late April, okay? So since April, since basically Easter here, when this thing touched its 200 moving average, it's been, folks have been trying to bid it. 2 weeks after that SPY 52-week low was the last time you could have really gotten this on sale, or realistically at $21. You know, not a crazy valuation. Basically, I'm saying sub 50 RSI. And after that, it's basically been standing room only, trying to get into like a Taylor Swift garage show. So, OKLO, your number one performer year over year. Congratulations, absolutely, if you're in that. Like I said, I think it's going to have, I don't want to say a rough week, but I wouldn't chase it over the next week or so specifically. The chart doesn't look like giving me those kinds of vibes, although great day today, 9%. If you can get in, as I said, around $72, when that correction is over by the end of next week, take it, because I believe that's headed to $85 to $88 by September, and the story will continue for the year. Speaking of which, so that's 1007%. Sounds ridiculous to say. 1,007% year over year. Next one, Rocket Lab, number 2, up 710% is Rocket Lab. This thing hit its high a couple of weeks ago, back here on July 17th, so almost a month ago, $53, and now it's been doing a lot of this. They did have earnings, and not much of a reaction. You know, the way these things work. I think right here, this is basing right around $44. I personally love it here, under $44. I do believe your target is $54. That's a massive move. I also love this has been above 48 RSI trading. They're all the same group, similar to OKLO. Well, this is more so on the aerospace and defense, but they've been trading very similarly since late April. Mega bid. And I think this is setting up. Yeah, I love it under 44. This one looks like it's headed 51 to 54, which would be new highs for Rocket Lab. Your second best stock year over year. And again, these guys that we're talking about right now, you got to give them the leash. So that's A-okay with me. I'm glad to see that these are setting up. And then the next one, we talked about this one too, IONC up 538%. Let's see what the setup is. These guys peaked. This one peaked a while ago. This is another quantum tech name, $12 billion pre-revenue. They have $50 million in revenue, for goodness sakes. They peaked basically New Year's week at essentially $55, and they've been essentially range bound. Although a nice rising 200-day moving average, I think they have a nice week ahead that takes it to about a 40. It's kind of tough because it really has been struggling to try to break out, even though there's strength in the group. I'll say this, at least 46. I really do have this going towards closer to 49 in the next week, possibly. It's been taking longer than I thought, and today's 4% move lower was a stumbling block. So we shall see, but I think this one could be setting up, not right now for you. I would probably get this one in a couple of weeks closer to a 42 entry. But that was my story on IONC, 530% year over year. You guys have a wonderful week, and I will be back with y'all next Wednesday. Peace.